Welcome back. After reporting season, I'd like to put the pressure on Rudi Filapek-Van Dijk to come up with some good investing ideas for the future. And given the fact that his organisation, FN Arena, surveys the analysts, let's just see what he's come up with. Welcome, Rudi. There's a nice plug there. You work for free, so...
Well, I can't argue with that, Peter. But before you're going to put me under pressure, let me give you a reward.
An award?
A reward.
A reward?
A reward.
Okay.
More than a year ago, when the world was really a scary place, remember, I turned up here with Nigel the bear.
Yeah, that's right. That stinking bear of yours.
And I always caused some panic behind the scenes here. But you were the one who said, I'll allow Nigel and Rudi in my show. Right? You know what happened between then and now? I actually published a book about the share market, about 2016. Look, you can see it's Nigel on the cover.
Right? This Nigel.
So it's called Who's Afraid of the Big Bad Bear?
Big Bear, yeah. So when was this released?
Here's your copy. It's late last year.
Okay, yeah. Well, I haven't plugged it at all. We'll hold it up so people can see it. There it is, Rudi. I think the bear's more attractive than you, Rudi, quite frankly.
I'm just tired from doing my analysis in the bear market. Anyway, it sags in with the reporting seasons we had in August and in February this year, because everyone, and I know most of your guests, they're all talking about this bull market and Trump and infrastructure and higher share market.
They can't ignore it, unfortunately.
But you know what? Substantial, and that's obviously part of the book as well, substantial parts of the share market are, without any doubt, in a bear market. And it has been quite severe. And
name names.
The obvious names are the medium and smaller cap industrials.
Yeah, and some of our buddies who are fund managers who were killing them and now have had a bad year.
I ran into a fund manager the other day, and I know he's specialized in small caps. I asked him, he said, unfortunately, minus 15%.
Minus 15.
And that's how it hits you, right? That's and also it might actually be a little bit of a smoothing exercise for people out there to realize it's not just them. Professional fund managers in the same sector get hit as well. Obviously, my portfolio has been hit a little bit as well. I'm not specializing in small caps, but I do have some of them. In particular, also, and this is why this is important, is that the good companies had made good gains for their shareholders, had quite a nice valuation attached to it. They've now been clobbered, hammered, what you want to call it. But that's the financial market doing their thing. Those companies haven't changed intrinsically. I mean, they're still doing their thing, they're still growing. And that's obviously where now investors have to decide what kind of investor they are.
Well Rudi, I very seldom have any issue with what Warren Buffett says, but he did once say diversification is for wimps. And a smart aleck audience member, when I was doing a speech, and I was talking about Buffett, and I was talking about the value of diversification, because I am a wimp when it comes to my money. I don't want to risk my money. A lot of my viewers are like that as well. And I think what we're talking about here today is the value of diversification, because if you're in those funds, and guys like Chris Cuff, he's an investor, a fund of funds, so he gets a whole lot of fund managers he likes, and he would create diversification by doing that. And so people who just play a one-trick game can have a great run, small cap, mid cap people.
Or can be completely wrong.
That's right, and at that time, as you know, I often like dividend-paying stocks, and I like the big caps. And so when I saw CBA at 69, I thought, well, this has to be a good buy. A lot of people said, no, it's not, because of capital raising and stuff like that. So, but I do believe it's important, if you're not a punter on that, to have diversification. What do you say to that?
I would, yeah, I mean, yes, but that also means that you will have stocks in your portfolio that will, at times, not perform.
That's right.
And that's where it really comes down. A lot of people have stocks and they judge them on their individual metrics, which basically means if it falls, I'm selling. Right? That can mean that you sell something that you're going to regret. How many people over the years have come to me and go, oh, once upon a time I owned Ramsey Healthcare. I go, well, I don't want to hear about it, yeah, because I mean, I've heard now so many times. We should own that stock. I mean, it's that simple. Even when sometimes it's temporarily out of favor, because the market sometimes does its thing.
Best time to buy it.
Well, if you're a little bit contrarian, yes. And what is happening now, and we were probably talking now something that's been happening since August last year. It's now March. There are times when some of the smaller cap industrials come to life. One of my real life experiences has been NextDC, for example.
Yeah.
I made that for better or for worse, or for good or for bad or whatever. I made that one of my key holdings last year in my portfolio. That went really, really well. When at one point it was up 80% for the year last year. And then it pretty much lost more than half of it in a very short time span. And I was by no means fast enough to anticipate that. So those are obviously the times when people think, Rudy was wrong. Because, look at this share price, it just falls off a cliff. In recent weeks, and this is where obviously the contrarianity comes a little bit from. If you're confident, and I was confident next year, I was hoping, you never know 100% certain, I was hoping that they would come out with a good result in February.
Yeah, I did.
And they would convince the market, listen, the share price is way too low, you're being silly here. And in recent weeks, you have seen that since the result, it's now at the highest point since, I think, September last year.
Did you buy more at low prices, or you're so long you couldn't afford to do it?
I had enough sitting in there, and I'm not a firm believer of averaging down, because at the end of the day, you don't want to make it such a big part of your portfolio that you go to bed like this every night.
Now we're running out of time.
Yes.
But I did ask you to nominate 5 stocks.
That's very easy to do.
All right, give us the 5, and next time we come back, we'll talk about them. So what are the 5?
Okay, Hansen Technologies.
Hansen, yep.
ARB Corp.
ARB, yep.
Technology One.
Technology One.
Bapcor.
Yep.
Do you want another one?
That's full. That's full.
Link Administration Services.
Okay. So next time you come back, you can tell us why.
That's an easy one.
Okay. Yeah. Okay.
It's very simple. Very reliable, dependable, strong growth prospects.
All those companies.
All of them.
Is Hansen a reasonable dividend payer?
They're a very consistent dividend payer. It's just that the share price can sometimes run up a lot, and then obviously the dividend, because
the yield comes down, but they are consistent.
They are very consistent.
There have been times I've noted as a smaller company, it's not bad in the dividend stage.
No, absolutely not. But obviously it depends on the share price. But it's never really cheap, and again, there's a very good reason for that.
Until they tell us your time is up. Do you think the market will? Do you think the market will have a bit of a Trump sell-off, because it just seems to be resisting it, but it's kind of overdue, Rudy, isn't it?
A saying goes, if the market can't go up, eventually it will go down, because people will lose confidence, lose patience, and just take money out of the market. I think that is eventually what's going to happen. At this point in time, I do not think there's any really disasters around the corner, but that's the problem with sentiment. It has run up on sentiment predominantly. Switching portfolios, sentiment, anticipation, and then obviously when it doesn't come, it can go in a funk.
It could be sell in May and go away. We've tried that before.
We could do that just again. Yes.
Okay, mate. Rudy Philippek van Dijk from FN Arena. After the break, Supervised Investments Mitch Taylor lets us in on how we invest in some of the market's toughest stocks.